President Trump's Big Beautiful Bill could be a game changer for the chip industry by offering a 35% tax credit to chipmakers like Intel, TSMC, and Micron if they start building US plants before 2026. The goal? Boost homegrown chip production and shore up both the economy and national security. We're also seeing leading American chipmakers announce significant reshoring plans. Announced in June 2025, Texas Instruments, America's oldest chip firm, is putting over $60 billion into 7 new US plants, creating 60,000 plus jobs. Micron and GlobalFoundries are also increasing US manufacturing, signaling serious momentum behind the chip reshoring push. While President Biden's CHIPS Act from 2022 used subsidies to lower domestic production costs, President Trump's strategy focuses on tariffs to penalize overseas sites, encouraging semiconductor companies to build locally. Why? Partly due to President Trump's push to return more industries to America, but also the critical importance of semiconductors to US national security given their use in defense technologies. Taiwan is a major manufacturer of semiconductors, so as tensions grow in the South China Sea, the US is taking steps to ensure its supply chains are safe and secure. For context, semiconductors help control and manage the flow of electricity and data inside devices including phones, tablets, and computers. A single semiconductor chip has as many transistors as all of the stones in the Great Pyramid of Giza. Here's a quick look at the global chip market last year. In recent years, chips have had a wild ride. First, supply couldn't keep up, then demand cooled and spending tightened. But now, the sector as a whole appears to be thriving. For the first quarter of 2025, global semiconductor sales rose 18.8% year over year to $167.7 billion. The industry outlook looks very promising. According to one industry body, the world's semiconductor market is expected to grow by over 11% in 2025 to $697 billion, primarily driven by the memory and logic chip segments. But this forecast from research firm Gartner is even more bullish. Gartner is projecting 14% growth this year for the global chip market to reach $717 billion. Gartner says this growth comes from the continued surge in AI-related chip demand and recovery in electronic production. Are you looking to gain exposure? You could invest directly in chipmaker stocks or consider a semiconductor-themed exchange-traded fund, ETF for short. ETFs offer built-in diversification and straightforward fees, making them a simpler way to ride the sector's momentum. The Global X Artificial Intelligence Semiconductor Index ETF, ticker CHPS, offers exposure to some of the largest companies that design, manufacture, and distribute semiconductors, as well as companies engaged in the AI semiconductor value chain. Here are some reasons to consider CHPS. It's Canada's first semiconductor ETF launched in 2021. It's got direct exposure to companies that design, manufacture, and distribute semiconductors. It's got structural tailwinds. The world's next generation of innovative technology will require semiconductors to power it. So in summary, the US is pushing to bring chip manufacturing back home, using tax incentives to encourage companies to build locally. Major firms are announcing big investments in new domestic plants, creating jobs and boosting production. At the same time, global chip demand is rebounding, with strong growth projections for the year ahead. For investors, this could be a timely opportunity to explore semiconductor exposure through ETFs or individual stocks. Got a view on the chip industry? Share them in the comments, and thank you for watching.